Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe, the weekend edition for Sunday, the 1st of December. Starting off with the FTSE 100, which looks as though it's in a mid-move consolidation. Bull flag there above a rising 50-day moving average. We've also broken that October resistance line there at 82.20 now. And the longer we stay above the combination of that resistance line and the 50-day line at 82.20, the greater the chance of a breakout through recent resistance around 83.05 up to the top of the channel there. 8600 hopefully by the end of this year. Yes, obviously looking for a year-end rally as normally happens, even in the most negative of markets. Moving on to the DAX, and here finally got our break through that October resistance line. We had a gap higher on Thursday, and as I've mentioned before, for some reason, Thursday seems to be a good day for the DAX. Bounced off RSI 50 as well, so above 19,500. Looking for this market to head up to 20,600 by the end of this month. A punchy call, but it can be done at this time of the year. Not expect anything lower now than 19,200. Which is the floor of the rising trend channel from this time last year. Moving on to the Dow, which has obviously been enjoying itself with the Thanksgiving celebrations, etc., etc. Very close to the red resistance line projection from back in August, 45,300. Above that, we're looking for the upper parallel of that line as high as 46,700 by the end of this year, over the next month. Ideally, we stay above the top of the old rising trend channel there from this time last year at 44,000 in the meantime. So above 44,000 up to 46,800 or so. Moving on to Bitcoin, where we're really wishing that this market heads up to 100,000 over the course of December, i.e. by the end of the year. The initial target here, actually, that April resistance line projection now heading up to 101,000. Above that, we're looking for the upper parallel of that line from back in March up to 120,000. Worst case at the moment is we've got a test for support at the old red resistance line there from March. That was, that's just shy of 89,000 at the moment. So hopefully if there's any rug pull, it won't be lower than that. Moving on to gold, and here nestled just around or just below the 50-day line there. That's rising there at 26.83. Above that, on an end-of-day close basis, looking for not only a retest of recent 27.50 resistance, but also move up to as high as 28.70, maybe by the end of next month, i.e. by the end of January. Not expecting anything lower now than the floor of the rising trend channel there from last year, well, the beginning of this year rather, 25.80, but looks as though we have had the rug pull we were needing. Moving along to the stocks, and starting off with Andrada, which has had one of its better ends to the week that it's had for a long time. Back above the initial November support there at 2.65. The longer we stay above that, the greater the chance of move to 3.1 pence hopefully over coming days, and then maybe up to as high as 4.2 pence by the end of next month. So ideally a bit of a rally there after the W-shaped reversal. Onto the type of stock I don't normally look at, but as there's so much M&A around, and Doc Martens is a sort of company that would be involved in that kind of thing, international brand, etc., etc. We also have a bear trap island reversal, so gapping down there in September and gapping up for the end of November. Initial target here, hopefully up to 78 pence. Best case would be up to 90 pence by the end of next month, while we remain above the top of the gap there at 63 pence. Moving on to global petroleum, which seems to be very much on the front foot at the moment. Rising trend channel there from back in May, top of the channel 0.45. And looking for that while we remain above the initial November resistance at 0.24. Both the 50 and 200-day lines rising there very nicely. On to MicroSalt, if I can get the right company there, which has had also had a decent end to the week above the 50-day line there at 77 pence. We're looking for up to the recent November peak at 101, and then ideally by next month up to 123 pence, which is the top of that broadening triangle there from back in May. The other positive is the way that we've got the 50-day line rising, and also unfilled gap to the upside at the end of October started this rally, which remains unfilled. Moving on to Mkango, and here I seem to be covering this stock every day, which is probably excessive, but the second target there was up to 10.25 pence, which was hit on Thursday, and above the first target there at 8 pence. We're looking for the shares to head up to as high as 14 pence by the end of next month. Obviously, if you're cautious, you wait for the 10 pence level to be cleared. The other positive at the moment is the way that Friday witnessed a golden cross, and the run-up to that has been the strongest part of the cycle. Stock which seems to be reviving itself at the moment is Mast, and here we've got a rising trend channel base that's been in place since May. Top of the channel, they're heading for 0.23, and we're looking for that while we're above the October resistance area at 0.17, which obviously we closed and did that. The other point to note is that we had an unfilled gap off the low, so it's a bear trap gap reversal. Tends to be a very strong signal, and you can see since then, on the 22nd, we've had only positive days, or positive or flat days for that stock. On to Nanoco, which I haven't looked at for a while as well, and here, let's get the right stock again, is you can see that we've got the shares rising trend channel base. We gapped down back in the end of August, and effectively have gapped up. There's a little gap there for the end of last month, but basically this looks as though it is turning around above the old October resistance of 13.5 pence, looking for up to 19.5 pence at the top of that rising trend channel from July. Moving along to a situation which has been slightly troublesome for some, given the trajectory of the shares, but shares have, in the last week, gone up and stayed up, which is quite an achievement. We don't normally do that. Obviously, we need to stay above the 0.26 or 0.26 area, the old July resistance, but above that, still looking for 0.045, hopefully, by the end of this month, fundraisers permitting. The other positive in the moment is the way the 50 and 200-day lines are both rising, so that suggests we're in a run-up to a golden cross, which ties in with the good news from the Northern Zone project from the company this week. Good to see Optibiotix on the front foot after its recent issues, let's say, and above the old October resistance there at 15 pence. We're now looking for up to 31 pence by the end of next month, assuming that we'll get a relatively smooth break of the 200-day moving average. I suppose the only problem here is there is a risk of a rug pull via a fundraise, given the recent history of the company, so watch out for that. Another stock where there's always the chance of a fundraise is Premier African, but this is also looking as though it's shirking off those fears. The initial target here was, the initial target was actually the 0.04 pence level, the top of that triangle there, but second one, the main one, the rising trend channel base at 0.057. Now we're looking for as high as 0.09 if we can get a decent clearance of the 0.06 area, which looks as though it is still on. Moving on to Rockhopper, which I thought I'd look at after quite a while, and here you can see a massive breakout for the shares second half of the week, and the trajectory is within a rising trend channel there from back in 2020, looking for 22 pence. Obviously, it's a bit of a slow situation, but maybe there's some traders who like that kind of thing. But certainly while we're above the 15.5 pence area, looking for the top of that channel up to 22 pence. Stock which has done well over the recent past is RBG, and looks as though it could still manage a bit more. We've had a bear trap item reversal, so gapping down there in September, gapping up on the 25th of November, and looking for that the resistance line there from back in May at 4.13 pence as a first target. Maybe we can get up to as high as 7.5 pence by the end of next month if everything takes off as it should. Ideally, we stay above the 50-day line at 2.47 pence in the meantime. On to the last two both relatively obscure situations, but we gapped up with Sabien on Thursday, and we've held that gap, and that suggests that we could at least retest March resistance towards 15 or 16 pence by the end of this month, especially while we remain above the 50 and 200-day lines at 10.8 pence. And if you look closely, you can see there's been a golden cross there, which is quite a nice thing to happen. Finishing off with the Windar, which may have caught some people out. Here we've also got an extended rising trend channel, and that's heading towards 65 pence, which we're looking for by the end of this month, especially given the way that both the 50 and 200-day lines are rising, and we've cleared recent resistance of 45 pence relatively easily. That's it for me today. More updates during the week.